There's not a lot about social housing that Phil Shanks, Chief Executive of Houses4Homes, doesn't know. Having been a social worker for 16 years, when it comes to housing people with exceptional needs, he's, well, been there, done that and got the t-shirt. Phil took his passion to a new entrepreneurial level when he launched the first social housing real estate investment trust last summer. We've come along to meet him in Rochdale to find out what his company's chances are for delivering the right kind of housing for local needs and the right kind of returns for socially minded investors. Now you've launched the first social housing real estate investment trust in conjunction with Mazars, and you're looking to raise between 200 and 500 million. How's that going?
It's going very well. I would remind you that we started with a much smaller ambition and have had to carry the market with us. We started off, actually, our first announcement was that we'd raise £20 million for extra housing. And that was put there with a view to generating the interest and the credibility to go to the market with a much larger requirement in mind. And we've built it up organically over a very short period of time in response to the investment market's demands. Having got the size of the pot, the size of the future demand that we've obtained from housing associations up to a reasonable size, we then found that the investment community started to drive it themselves as they made greater demands. They wanted to see a pipeline of demand for new housing and existing stock of about £1 billion plus. Now we've delivered to them a pipeline of £1.35 billion, and that amount is growing almost on a weekly basis now. The markets are now ready for us to come to them and to raise the money. So it's going very well.
So how's that pipeline made up?
Well, the £1.35 million pipeline we have at the moment is made up in the main of £900 million worth of social housing stock, £250 million worth of extra care and supported housing stock, and within that is approximately £100 million worth of transfer stock. But that number is already out of date because we've subsequently...
In a matter of weeks?
In a matter of days, and it is moving that quickly, particularly now as housing associations are beginning to realise that it's a transfer opportunity for them as well. So we've just added another £500 million requirement in transfer of existing stock, and that number is expected to go up substantially, particularly for the housing associations in the £200 to £300 million stock size.
You've initially offered investors a minimum guaranteed rate of return. And what makes you so confident that you can deliver on this promise of, well, it started at 4%, didn't it?
It started at 4%, and there's been a bit of a journey with that because we were going to the market about 8 or 9 months ago to obtain their views on that return rate, and the market just did not like it. When you compare it with other investment opportunities, particularly things like private finance initiative, it doesn't stand up very well against those at 4%. So we had to look at how we could raise the return rates.
Sacrifice is a bit of a strong word to say, but you had to make some changes yourself with the whole sort of plan, didn't you? Because the issue of leveraging came in as a demand from investors. How did you feel about that?
Leveraging is something that we've always had concerns about right from the outset, and that concern has been about risk and risk to investors. But it was the investment community themselves that said they wanted the leveraging introduced into the offering to drive a better return. A return that couldn't quite match PFI, but that would certainly get closer to what PFI could produce for them. I challenged Mazars to come up with a leveraging model that gave the investors the benefits that they wanted, but not at disproportionate risk. And they came up with that framework, and it's been tested to destruction, and it's been found to be durable, and it produces the investment return in excess of 6% on an IRR rate, which is much more favourable.
Well done. So you're confident about that going forward?
Absolutely. Our confidence really arises from the fact that we have confidence in the income source, and that matched to the leveraging formula that Mazars have come up with for us, yes, I think gives very good cause for confidence.
Your company has to interact with a fair number of stakeholders. We've got housing associations, charities, local authorities, investors. How do you juggle all their different needs and priorities?
Well, the first thing is to recognise that the biggest stakeholder of them all is the government. And we have been establishing and are continuing to establish a very strong relationship with the Health and Communities Agency. For a year now, we've been banging on their door, initially asking them to regulate us. And to
because you're not regulated, are you?
We're not regulated
yes,
at all at
because
the moment.
You're the pioneer leading the way with this type of investment.
Precisely, it's regulating something that doesn't yet exist, and that's always a very difficult ask for governments, even though they have said in the housing statement that they want real estate investment trusts to exist to do the job that we're doing now. But yes, it's very hard to regulate for something that's not there. And for a year now, we've had an ongoing dialogue with various senior civil servants at that government department. And tomorrow we meet with the Health and Communities Agency to finally take the first steps in regulating us and to ensure that regulation works in conjunction with the Housing Association's regulation and obviously the needs of the FSA.
Phil Shanks, Chief Executive of Houses4Homes, thank you very much for talking with us.
Thank you very much.